L&T Finance buying out Fidelity's mutual fund business in India. Mr. Van Deersteli, who's the chairman and MD of L&T Finance Holdings, joins us on the show to give us more perspective on the deal. Mr. Deersteli, first of all, congratulations on this acquisition. Let me just begin by understanding what media reports have been suggesting as of now as far as the deal value is concerned. There are reports that L&T Finance has paid anywhere between 550 to 600 crores, which values the Fidelity mutual fund AUM at 7%. Is that a fair number to go by with? Could you confirm or give us more details on that?
As I said yesterday during the press conference, we cannot give you any heads up on the valuation right now. We will let you know after the transaction is completed. What we have said is that the valuation is in line with the deals which have happened in the recent past. So I think that's about all I can say. I can't throw any more light today. We will let you know as soon as the other formalities and the transaction closure happens.
So, Mr. Deersteli, suffice to say that the deal has been struck at a premium?
I think I have clarified the point to you, and I don't know what you mean by premium. It's actually a very strategic transaction for us, and you will know. We will let you know. I think currently our focus is on completion of the transaction, and as soon as we finish all the formalities, we get regulatory approvals. I think everybody will know. So I think today we are constrained. And please excuse me, I won't be able to say anything more on the valuation.
Fair point. Mr. Deersteli, also talk about the synergies that emerge out of this alliance, because L&T Mutual Fund is largely debt-oriented and Fidelity has about 68% of an equity base.
Well, actually, that is the reason, one of the main reasons why we decided to bid. There are a number of synergies. And therefore, as I said earlier, it's a very strategic transaction for us. We started our mutual fund business in 2010 when we acquired DBS Chola Asset Management Company. That is predominantly a debt asset management company. We needed to build equity portfolio, and we also needed to build retail portfolio. So what this transaction does is that it brings good quality equity assets, and it also brings retail portfolio and high net worth individual portfolio. That is synergy number one. The other thing is there is also a complementarity in terms of distribution. We today largely are distributing through IFAs. They use other channels such as banking and other distribution channels, and I think there also there is a lot of synergy. The last point is that we have also looked at the people and the talent. It's a high quality talent which is coming along with this, and we have also mapped, and there is a detailed integration plan which has been prepared, which shows us that in terms of people also it's very synergetic and very complementary. So before we decided to participate, we had looked at all these aspects and took the decision of getting into this. It also takes us to a different league for a 4,500, 4,600 crores AMC. We now, with these two together, we go to about 13,000 plus. And in terms of equity portfolio, we are around 10th in the ranking.
Right. Mr. Deersteli, you have stated that a large part of the L&T Finance business is lending, and the move with this acquisition is essentially to boost your fee-based income. Could you perhaps, in percentage terms, quantify about how much do you expect your fee-based income to go up by because of this acquisition?
I think that's a very important point. You see, if you are in financial services business, and particularly through the NBFC structure, if you are targeting return on equity or return on net worth, you will always have some limitation, because your borrowing cost is slightly higher than the borrowing cost of banks, and therefore in terms of your ability to generate superior returns, to some extent there is a constraint. So if one is talking about generating about 16-17% return on equity through the lending business, it has to be supplemented through the fee-based income. In terms of percentage of bottom line, I am not commenting right now. However, our effort will be through all the businesses to generate fee-based income and supplement the fund-based activity and generate about couple of percentage point higher return. So if the lending business is generating 16% return on equity, with this high quality fee-based activity, we should be able to reach around 18.5%. And it is not only asset management business. I think it is important for us to know that in our other businesses also we are creating a portfolio of fee-based income. For example, in case of L&T Infrastructure Finance, a couple of years ago we started syndication, and we have capabilities of syndicating large loans for infrastructure projects. In L&T Finance, we also have a distribution business which is also a fee-based business. So I think it is essential for us to make sure that along with lending, we have this fee-based activity to boost the return to shareholders.
What about the losses that Fidelity has reported of about 300 crores plus? Would L&T Finance be taking over those losses? And it has a fairly large team in India, so would there be checks and balances and cost cuts perhaps on that front?
We are not taking over those losses, and therefore that should be very clearly understood. As far as the teams are concerned, as I said earlier, they have a complementary team, and a substantial part of the team will come along with this particular transaction. There will be some optimization, but we must also understand that this particular entity, Fidelity, was in one business of asset management. L&T Financial Services portfolio is a comprehensive portfolio, and therefore even if we look at the business sectors in which we operate, there are opportunities for high quality talent in many businesses. So first of all, we have seen when we looked at the positions, we feel that there is complementary nature, and therefore we should be able to utilize the talents which is available in that particular entity. But what it does is that it does provide career opportunities for these people in other businesses as well. So for example, these two NBFCs, or as I said earlier, infrastructure financing, we have an insurance business. We have recently done a transaction for mortgage funding or housing finance. So I think there are plenty of opportunities for this talent, which is what I think is very, very important from a career perspective of this talent which is coming along with this transaction. And the other thing is that the chief executive is an extremely important part of this transaction.
Right. Mr. Deosthali, is it true that L&T Finance was not the highest bidder in this deal, but because you guys agreed to retain the entire team, it was you who won?
Well, I think it is not fair on my part to comment, because it is actually on the part of the seller to talk on this subject, if at all. But I think the fact remains that the discussions which we had with Fidelity indicated that they are looking at it from all aspects. Apart from the fact that the team is important, the second thing is they are also very keen on certain other things like the governance standard, the manner in which we run our businesses, also the ability of the buyer to integrate. I think there are several factors which have gone into this, but I think whether we were the highest or lowest is not for me to comment. It will not be appropriate. I really don't know. That's the correct answer.
Right, Mr. Deosthali, I know, you've been asked this question many times, and you're not going to be putting out a number out there, but, just a sense, since you have expanded your business with this acquisition, there has been in the past a premium paid for asset management companies. If we just go by the numbers that are floating around in the market, the expectation is a 6.5% to 7% AUM pay cost for the business. Do you think that such premium valuations for the asset management business in India is pretty much the norm, given the scalability and the kind of growth potential that these companies come with?
Well, I will not comment on the percentage, as I said earlier, and I will not talk on the valuation. But I think it's important for us to understand that the mutual fund industry in India is not well penetrated. And if you look at the advanced countries, the mutual fund penetration is much deeper than what we have in India. In fact, in some of the advanced countries, it is almost 100% to the GDP number. That's the market size. So I think we are way below that, and therefore there is plenty of potential. The other important point is that if your fund performance is good, if your distribution is very good quality distribution and it is diversified, and also you have a good brand, mutual fund on a sustainable basis can produce reasonably good returns. I think that's the way in which we have looked at it. It's not, again, financial services is not a short-term business, but at the same time, from two angles we have looked at it, that there is a potential opportunity to grow in this business, and there is an opportunity to have sustainable fee-based income.
Okay, Mr. Devasthali, many congratulations from Team ET9. I appreciate you taking the time out and joining us today on the show.